Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. I'm recording this around noontime on Friday, July 7th. So it wasn't quite a quiet holiday week here with Independence Day. 2 weeks ago, we finally saw the market pull in after a huge run, especially the leading stocks, NASDAQ, stuff like that. And last week, we ramped right back up, which is a good thing. But I did, say that, hey, 6 days down the NASDAQ, I'm all for it if that's all it wants to pull back. But odds favor some more shaking and baking. That's kind of what we've seen this week, prompted by a big backup in interest rates, which is something to pay attention to, and I'll talk about that later in the charts, okay? So, I think near term, I guess I would say the odds maybe slightly favor some more shaking and baking. Raise the discomfort level, maybe knock you out of a stock or two, something like that. Or if you bought something that was extended and, near the peak, you have to cut the loss, that sort of thing. But overall, if you've just been at the beach or at the bar, at the grill and kind of coming back and looking at the primary evidence, trends of the market, action of leading stocks, health of the broad market, not as good, but, defensive stocks haven't been ramping. If you just look at all the evidence that I look at anyway, the odds still strongly favor this being sort of the normal, quote, first correction or consolidation or rest period, whatever you want to call it, in the leaders during this uptrend. And usually it's choppy. Usually it goes on for more than just 6 days, and so maybe maybe the next week or two is choppy. We head into earnings season, see what happens. But overall, until I see, leading stocks either crack 50-day lines or really show abnormal action, giant volume selling, or I start to see the same stuff in the major indexes, I would certainly be leaning bullish here, giving your, relatively strong profitable stocks a chance to advance. And if you do have some cash on the sideline, if the market can, pull back further and find support, I'm not saying catch falling knives here, but if we kind of pull in here and slop around, I do think there's going to be some more opportunities here in terms of good risk reward entry points. Okay, let's hop on the charts. Enough for preamble. As usual, I'm using a product called MarketSmith, product of Investors Business Daily. You can learn more at marketsmith.com. So you can see the NASDAQ here. Like I said, it was only 6 days down. We ramped right back to new highs. And this week, for the NASDAQ itself, it really hasn't been bad. I forget, on the week here, I think we're down 0.5%. Yeah, exactly 0.5%. Okay, and more importantly to me is just, this has been the leading index, and at this point, we're still above even the 25-day moving average, which is what we use for sort of shorter term stuff, well above the 50-day line, okay? Other indexes aren't quite as strong, but I mean, the S&P 500 looks very similar to the NASDAQ, hasn't even really come that close to the 25-day line. Not that close anyway. The broader indexes, again, not as good. So it's one of these things where, they're having a good day today. It's one of these things where they're holding up. This is the IWM Russell 2000, which, to be fair, is the weakest index, the major index. But, it's not going anywhere either, right? So we had this 2, 3, 4 day ramp, and now we're just kind of chopping sideways. Okay, this is the mid caps, MDY. Same sort of thing. This one's stronger. It has held the 25-day line. To me, it's just more hasn't been going anywhere sort of thing, hasn't been able to get a head of steam going. And, of course, the New York Composite. So, same sort of thing. It's still holding up. If we came down here next week and I'll say the broader indexes, say 3 of them, all kind of fell down and broke 50-day lines, kind of back in the soup. It doesn't mean, the market's going to fall 10%. But, that would change the outlook at least a little bit. But for now, when you look at it on a trend basis, even like the worst thing out there, kind of bottomed out here. This is the IWM, popped, and it's kind of holding this range here. Okay, now, if it stops holding that range, like I said, that's a different story. But so far, so good on that stuff. Growth stuff has been choppy, but again, holding well. This is just sort of one of these things where if you're paying attention day by day, and hopefully you weren't. Hopefully you, like I said, you're at the beach or something like that. It's a little tedious because it's about now, we're 3 weeks into it. That's about mentally how long it takes for people to say, yeah, this is getting a little tedious, But this is the semiconductors. Overall, you can see it's just basically been resting here after this AI moonshot in May. The IPO fund, some of these I run through, still looks pretty good. Again, 25-day line, choppy, no progress for a couple weeks. But so, I tend to think, this is FFTY. Same sort of thing. I tend to think, like I said, this still has the hallmarks of a normal correction, at least when you're looking at leading indexes, leading stocks. If you're looking at the broad market, obviously not as strong as, a lot of the leaders, but I tend to focus on the leaders, okay? Just a couple other indexes here. First, this is the XLI. I had mentioned this, and this is kind of, I don't want to say it's like I'm cluing off of it for cyclical stocks, but I have seen more and more, cyclical stocks act well, even with the sort of rates backing up this week. And XLI continues to act well. And then, of course, I like to keep an eye on, here's XLP. It's there's a day or two here and there where XLP is up, whatever, 0.5%, or it's up, a couple of days in a row here, and the Nasdaq's down. But I can't show it to you on MarketSmith, but if you take our aggression index, the Nasdaq or the Nasdaq 100 equal weight, compared to the XLP, it's still well above where it was and well above sort of intermediate to longer term moving averages. Okay, XLU, same sort of thing. It popped here for a few days, but then back down. So there's no rush into defensive stocks. There's no huge distribution in leading stocks. It's more tedious action. There's some stocks that, like I said, they're kind of bending or whatever. But overall, I would have to see more. The onus is certainly on the bears here, I think, to prove that they're sort of taking control of at least the broad market, if not cracking some leaders and stuff like that. We haven't seen that yet. Now, interest rates. I do want to say this. Interest rates are important. They're not as important as the primary evidence, because that's primary evidence. It's not a coincidence, though, that if you look at let's just look at the spiders. Here's your low in October, let's call it mid-October. And then here is the 10-year note yield, which, look at that, peaked in mid-October. Okay, so the interest rates have been, I don't want to say driving the market, but obviously were a big factor last year with the Fed. That was the biggest factor. If the 10-year note, if this is some big base, which maybe it is in terms of the yield, and it breaks out and it goes from 4% to 5%, yeah, that's probably not going to be good for the market. You know what I mean? So it's not something I am looking at it, but let's just see how it plays out. Maybe it pops and comes back down. Maybe we're just kind of still in a range. Maybe not. We'll see how it all plays out. Same thing with the 5-year note. These are all challenging sort of multi-month or cycle highs, I guess I would say. Okay, and we'll just have to see how it goes. I wouldn't trade based on it, but certainly I wouldn't just, a lot of the news out there is like the jobs report, like forget about that. But stuff like interest rates, especially in the market, can have an impact, both in terms of, sentiment, but also, literally people putting money into, 2-year notes instead of into stocks. It's kind of a money flow situation as well. So we'll see how it goes. It is something I'm watching. But at this point, it really hasn't done anything to create any abnormal action in the market, okay? In terms of individual stocks, I'm sort of looking, just when you look at the NASDAQ here, we had this ramp, and now we've had, I don't want to call it a leg down, but, one little hiccup here, and we're kind of having a second little hiccup here, maybe, okay? I'm sort of looking at stuff that maybe is having some of these second hiccups. So here's HubSpot, which on the weekly chart, it looks totally fine. And it should hold up around here if the market is healthy, if the stock is healthy, okay? The stock showed great relative strength really all year, holding the 10-week line. And just in here, it's a $500 stock, but still, you can see it can move. I mean, it was $350 a couple months ago. So it went from 35 to 50, and it's basically tightened up right here, right around 50. You can even see yesterday, which was the NASDAQ was down 100 and leading stocks got hit, but it did find some support here near the 50-day line. So HubSpot's one that I am keeping an eye on, kind of an emerging blue chip kind of feel. A lot of these I mentioned before, Confluent, CFLT, certainly choppy on a day-to-day basis, but you can kind of see, again, you sort of had this first leg down with the market, it bounced, and now you're having this second leg. Again, I don't want to call it a leg down, but just kind of a second little wobble. Overall, you're now 4 weeks into this consolidation as the 10-week line catches up. ServiceNow, that's a different beast, higher price stock, clearly kind of a liquid leader. I mean, not the be-all, end-all of a leadership, but looks pretty good in here. Again, you kind of had, this one did have an earlier shake, but you've had shake, but support at the 25-day line so far. Netflix, we'll see. This was interesting because it did pull back with the market, and like the NASDAQ, it did sort of tag or test its old highs, and then it's just kind of come back in here, but looks fine. On the weekly chart here, this was a nice little, this is a turnaround situation. I wouldn't say it's really growth, but you did have 6 weeks up in a row, it looks like, right out of this base. Pretty good volume here, and it's been holding pretty tight. So, it's not the top of my watch list or anything, but I do think Netflix acts well. Even outside of growth, this is Apollo Global. Again, this sort of, it's a bull market stock. It's a alternative asset manager. Got hit here with the banking crisis, got hit during the bear market. Obviously, you wouldn't expect it to do well when asset prices are going down. But, you did have this complete change in character here where, a little bit of a higher low, and then you had a million days up in a row, whatever that was. And now, again, you've kind of had this two legs down. I got to think of a better term for that, but, holding the 25-day line, okay? And then, of course, ACLS, I mentioned this like almost every week. It has had, my only thing here, the stock has gone from, call it $90 to 180 so far this year. So it's already doubled. So it's kind of like, does the stock need, maybe it goes higher and then comes down. It's going to have earnings obviously here in August 2nd, so that's coming up in a month. It's had a big run, but just in the intermediate term, or at least a short to intermediate term, it does have sort of this second leg down action, higher low, holding the 25-day line. So it looks pretty good, okay? Outside of that, just running through a bunch of other names, there's still a lot of names that look good. This is ADBE. Again, not my super cup of tea, but really just a nice, if you didn't know what the stock was and you knew it was liquid, but you didn't know, whatever it was, just a huge, huge volume ramp here on earnings, big breakout above $400, runs from 400 to 500 within 3 weeks or something like that, right? Boom, 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 boom. And then you can just see this action. Yeah, there's a little bit of a pullback here, and maybe it needs a little bit more, but you can just see holding very, very tight on the daily and the weekly chart. I mean, look at that on the weekly chart. It's really pretty interesting. MongoDB, this is just, I'm seeing just a lot of this where, it's tedious. This is MDB, but here's your earnings gap, holds tight. It stretches its legs and it comes back in. Now, if you bought, the breakout, again, if you kind of bought it at this little second peak or, the peak last week, you're under some pressure, that sort of thing, but you're not, if you don't know anything about that, you're just looking at the chart, you're like, the stock looks fine. It's just still above the 25-day line, no volume selling down here. So you're just seeing a lot of action like this, which is, it's more tedious than negative for sure, okay? Maztec, MTZ, I'm still watching this. It looks like, I think it might actually have a down week here. I think it had 9 weeks up in a row. Not the biggest mover, but it's kind of a cyclical construction type name that does look good. Probably needs a little bit more time, but certainly looks totally normal to this point. Shopify, I mentioned this just because, again, sloppier, hasn't done anything in a while. I'm not a big fan of the off the bottom names. I mean, I guess I just mentioned Netflix, so what do I know? But, it did have this big earnings gap here after recovering for many months. It wasn't like it was right off the bottom down here, which usually isn't reliable. And now it's spent, call it 8 weeks in here with the 10-week line catching up. You can see the 50-day line here near $60. I'm not going to tell you what to do. Maybe maybe you wait to see if it can resume, maybe you nibble, whatever it is. But, pretty good setup there and a big liquid name one way or the other. DDOG, I'm not, again, I just mentioned, I'm not usually big fans of these stocks that come right off the bottom. Usually a lot of things will come down, bottom out. It's what we saw this year. They rally, and then they kind of form this first thing, and then they get going, okay? So we'll see how it goes, but I will just say Datadog did bottom out for a while, and I am impressed with this sort of weekly volume cluster, and I'm impressed with how it's held up here so far. It's actually kind of threatened new highs this morning. It looks like it's not, going to make it there, but still, holding in there pretty tight. So DDOG's one of these old winners that's maybe it's kind of a romance transition reality thing, if you know that theory situation. So we'll see how that goes. Kind of a cousin stock here is Dynatrace, same sort of thing. Maybe there was news in the group. Same sort of industry here, but again, you've had, this was an example of one that bottomed. It did have this pop, then it built the base, then it ran, and now we've seen, again, 4 or 5 weeks, very, very tight, no real selling as the 10-week line sort of approaches. We'll see what happens. Maybe we come in next week and they fail, but at this point, it all looks pretty normal. Just a couple more here. Celsius looks good. Might have to pull back in here, but CELH still acts well. Dave & Buster's, not exactly what you think of, hot stock, but kind of a turnaround situation. Big earnings, very solid earnings estimates this year and next year. Good valuation if that's your thing. Big bottoming action here, and just notable, kind of a not double skyscrapers, but pretty interesting action here off the bottom. So just showing some accumulation. And just a couple more. I'll just mention Noble. I mentioned how FTI last week kind of broke out. It did break out on the upside, and it wobbled a little bit with the market here and the economic fears, but it's held up pretty well. That's FTI. Now Noble's a driller, and you can see the stocks just kind of, again, it didn't really do anything wrong. It just sort of chopped in here to the 40-week line a couple of times. Who wants to own oil stocks? Now all of a sudden it's kind of coming to life and actually pushing to new highs today. So we'll see. It's pretty sharp up here, but certainly flagging it. And last but not least, again, it's just sort of, I noticed this a little while ago and I haven't mentioned it, but this is Bill.com. Again, you'd like to see sort of a longer bottoming area, but the stock was a huge winner. Okay, it got destroyed, obviously, in the bear market. The numbers are great. I mean, the numbers really are impressive. I'm sure growth is going to continue to slow because the company's now, billion-dollar sales run rate, but huge earnings, okay, stuff like that. And the stock really has changed character here. And again, I'm sort of using this, I don't want to make this correction into some huge litmus test because at this point it's been 3 weeks and we haven't really pulled back much. But, say the market does, jerk around here for another week or two. And the longer these stocks can kind of hold up, the more it's telling you like, hey, this isn't something that just kind of came off the bottom and then went splat. So here's Bill.com, short bottoming area, nice earnings gap up to the 120 level. And it's just basically been kind of consolidating in there. Not something I would touch here, but just kind of flagging it, keeping an eye on it. Maybe it bases out here and, reports earnings and gaps again, that sort of thing. So we are starting to see some of these situations turn around. So that's really it. Back to the market. We'll see. I think it's important to stay flexible. Just to be clear, Cabot Growth Investor has 30% cash. Should have mentioned that at the outset. So I'm not flooring the accelerator or like crazy, bullish, buying every dip sort of thing. I do think we could pull in more here in the near term. But until I see something different, I'm sort of thinking a little bit more of a shake would just be kind of the normal, healthy first correction, reintroduce some fear. Now people are worried about interest rates. It'll be a little news driven here near term with economic reports and CPI reports and stuff like that. But if you don't know any of that and you're just looking at this, you're just saying, hey, the leading index is acting fine. The leading stocks are acting fine. The leading groups are acting fine. So near term, anything is possible. But, I like to play the odds. And right now, I think the odds continue to strongly favor that this being sort of a normal rest period and that the next major move will be up. Okay, that's all the time I have for today. As always, thanks for listening. And be sure to come by again next week for another Cabot Weekly Review.